Welcome to After Hours at Traders Pulse for Friday, October 10th, 2025. I'm one of your hosts, Tom Hartman, marketing manager here at Traders Pulse, joined by Peter, Exit Liquidity, Hartman, to break down the madness. He's also part of the marketing team. After Hours is your go-to live stream focused on macro trends for retail traders. That's dollar, equities, and policy for the uninitiated. After Hours is brought to you today by Blue Sky, the best-in-class prop firm that offers same-day activation, daily payouts, and no max restrictions. But we'll tell you more about that later. For now, I want to open up the show by just explaining to everyone, just letting everyone know, just doing a little bit of a circuit here, a little victory lap to show the importance of macro in trading. Peter, today the S&P fell 2.67%. NASDAQ fell 3.39%, and Bitcoin is starting this journey here at 4%, which isn't so bad, but is still pretty high, especially when everyone's been enjoying all-time highs session after session after session. Really in the overnight sessions for the last little whiles now. Macro can come in like a Mack truck and just completely, boom, blast you. And just like we saw today on Price Action Live, where Mike and I were trading 9:30 a.m. today, prop firms, you can see how a trade like this, if you're on the right side of it, can be absolutely mind-blowing as far as payouts are concerned, because you can get, if you have a funded account, you can get such a great move in order to stock up your coffers, or you can have just a massive blowout day where you think you're following your technicals the way they should be, the market's volatility is low, and all of a sudden you get completely smashed in the face as the market goes the other side. So this is just to reinforce the idea that macro is important for traders, even if you're a day trader. Peter, you weren't in markets today, but did you know anything had happened?
I wasn't paying attention. I was too busy working, but no, I didn't know.
All right, so that's the other thing. When you are aware of markets, you're aware of news that matters and news that doesn't.
Mm-hmm.
And news like this, when I see something like this happens, it's only when I see moves like this happen do I then go and try to dig in a granular level to see what's going on underneath the hood. I'm not interested in sitting day by day and trying to figure out if a move like this is going to happen all of a sudden. All right. As I mentioned to everyone today during the meeting, where normally people try to avoid trading during a volatile period, a volatile event, and Trump's presidency is a volatile event. And so I accept that. I accept that when I go into markets. But when I see a move like this, now I go in and I see, okay, what's the narrative? What's actually moving markets? And how can I play it from over here? So we will be touching on the dollar, equities, and policy as we move forward today. But I just wanted to touch on this idea, a couple of things you want to keep in mind when you're looking at a macro event. One, we fell? A macro event could be up as well, but did we close at the lows of the day or did we close at the highs of the day? So when you have a candle like this that's falling, as we're seeing here for the NASDAQ, we close basically near the lows of the day. That means that we didn't fall and then, dead cat bounce and retrace back up 1/3, 1/2 of the move. When we get a close like this, generally speaking, it means the selling isn't over. Generally speaking, it means the selling isn't over, and that we can still go lower. How much lower can we get on the NASDAQ? I think getting to 24,155 is a no-brainer. That will completely retrace the move we've had since September 5th. But take a look here. If we are entering into another tariff-like war, and we're going to get to exactly what happened here. This is a move that happened because of Trump and China. In fact, let's just touch on that right now, just to keep everyone on the same page. If you're not aware of what happened, why the market sold off today in many of these equity markets is because of the Trump response to what happened in China. So what happened in China recently is, let me pull this up. So if I read this post from Arnaud Bertrand on X, we'll see here where he summarizes a little bit what's going on over here. Let's read it. He says here, this is actually big, potentially huge. The idea here is that China bans export of technologies and carriers related to rare earth mining. Essentially, if rare earths that are coming from China are being used within within any product, they might have veto rights. They might be able to ban that export. They might be able to increase costs on it, that sort of thing. Even if a product anyways, let's read what Arnaud Bertrand says here. So he says, this is actually big, potentially huge, not only because China's new rare earth export controls include a provision whereby anyone using rare earths to develop advanced semiconductors will require case-by-case approval, which effectively gives China de facto veto power over the entire advanced semiconductor supply chain, as rare earths are used at critical steps throughout from ASML to TSMC. We're talking about AI development here, folks, throughout all the countries in the West. The export controls are also extraterritorial. Foreign entities must attain Chinese export licenses before re-exporting products manufactured abroad if they contain Chinese rare earth materials comprising 0.1% or more of the product's value. So China is effectively mirroring the US semiconductor export controls that were used against them, with its own comprehensive extraterritorial control regime, except with rare earths. So that means the AI development can be severely curtailed as the semiconductor chips that are necessary for that technology becomes harder and harder to get, maybe even impossible, if China decides to use that lever. Now, it's been claimed that the reason why China was doing this is to have leverage ahead of Trump coming to speak to President Xi in China in the next couple of weeks, and that they wanted to have more cards in their pockets. They weren't saying specifically what they were going to do; they were just getting the rights to this. And so the question here is, how did Trump respond? So if we go to Trump's response here, this is his Truth Social that he posted. All right. And we're going to go ahead and read this because it is important in order to set the tone. Actually small here. Let's just get to this one here. Peter, you can see this?
Yes, I can see it. What the heck is this? Why is it such a block of text?
Yeah, exactly. All right. So here, this is Trump's tweet. Some very strange things are happening in China. They are becoming very hostile and sending letters to countries throughout the world that they want to impose export controls on each and every element of production having to do with rare earths and virtually anything else that they can think of, even if it's not manufactured in China. Nobody has ever seen anything like this, but essentially it will clog the markets and make life difficult for virtually every country in the world except for China. I don't know, sort of sounds like when sanctions were put on Russia because of the war. So not that this is completely unprecedented, but yeah, crucial things have been, let me not editorialize here. Let's just read what President Trump said. We have been contacted by other countries who are extremely angry at this trade hostility, which came out of nowhere. Our relationship with China over the past 6 months has been very good, a very good one, thereby making this move on trade an even more surprising one. I have always felt that they've been lying in wait, and now, as usual, I have been proven right. There is no way that China would be allowed to hold the world captive. But that seems to have been their plan for quite some time, starting with the magnets and other elements that they have quietly amassed into some sort of a monopoly position, a rather sinister and hostile move, to say the least. But the U.S. has monopoly positions also, much stronger and more far-reaching than China's. You can imagine that by this point, hedge funds and traders are rushing to their terminals in order to sell everything that they have. I have just not chosen to use them. There was never a reason for me to do so until now. The letter they sent is many pages long and details with great specificity each and every element that they want to withhold from other nations. Things that were routine and no longer routine at all. I have not spoken to President Xi because there's no reason to do so. This was a real surprise, not only for me, but for all the leaders of the free world. I was to meet President Xi in 2 weeks at APEC in South Korea, but now there seems to be no reason to do so. The Chinese letters were especially inappropriate, and that this was a day after blah 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 blah. All right, so and then he goes on and in Trump fashion. So the idea here is that he goes, "Hey, we're not even going to meet. We're not even going to meet anymore. Forget you. You want to play hardball? Let's play hardball." And the markets, understandably, sold off unbelievably hard. Now, this is just a 3% drop, or a little bit more than a 3% drop on the Nasdaq. But if we go back to the drop that we had here in February, from February 19th to the beginning of April of this year, we had a drop here of something like 26%. I don't know if you guys remember this. I don't know if you guys remember this drop of 26% where we thought a new bear market was starting for the next 5-10 years, right? Because usually a drop of more than 20% in markets generally signals a bear market, and that we're going to have lower highs and lower lows from then on for a while. And we got to 26%, but then it completely reversed. So the question here that everyone has is, how serious can we take this Trump tweet? Truth. So are we going to get 20% down, another 20% down, and get down to the levels of 18,000 on the Nasdaq, 5,300 on the S&P? Is that what we're geared for? Is Bitcoin going to head down to $75,000 again? Is this what's going to happen? If so, let's short. Or is Trump going to be like, no, we don't actually want markets to go down. I wasn't expecting markets to go down because of my tweet, my truth. Let me go ahead and reverse. So it'll be the taco trade again. Trump always chickens out, and all of a sudden the market reverses and we go back to all-time highs. I don't know, Peter. I don't know, but it is something to keep in mind here. We want to pay attention to what's going on, because the moment there's a tweet, the moment there's anything about Trump changing his mind on this, you can expect a massive rally in the other direction. Why? Because the drop we had so far wasn't crazy. If we go back to, let me see if I have it here. Yeah, if we go, Tier 1 Alpha talks here about volatility being destabilizing at these levels. So the way, because we're after OPEX and because of the structure of the options market, there is this negative gamma towards the downside, which is to say that there's these when a selling event occurs during a weak period in the markets, it can be exacerbated to the downside or to the upside, but in this case, the downside. So the selling that we saw might be deleveraging of long positions and just this reflexive gamma loop, and not exactly that the sentiment has changed. In fact, when I went to go look online to find, hey, where are the clips? Where's the conversations about this drop, about what Trump is doing? Crickets, barely anything. I saw one Bloomberg clip about it, about two guys talking about it, very much like what's going on right now, and that was about it. How is this not breaking news on CNBC, on Bloomberg, on all these different platforms? Not getting it. So,
in the chat, we have Option G, who says Trump cares too much about the market by the dip.
Right. So it seems like calls are the way to go, or writing this up, and that we can't go much lower, or it doesn't matter how low we go, there's dips to buy. So we're gonna by the end of this episode, we will be talking about Scott Besant, who is hand to the king, and who I pay attention to when it comes to the actual monetary policy that we have to be expecting. But for now, that's what's going on. That's the state of affairs right now with the Trump-China beef. The dollar, Peter. While I was preparing for this episode earlier on, we didn't have these moves, but now we have a big drop in the dollar. So everything I'm going to be saying so far about what we're seeing in markets, just sort of keep in mind that this could totally all reverse in the other direction. Right?
Wait, do you think, I guess you'll tell us later if you think it's all going to reverse. Yeah, tell me about the dollar here.
So we had the dollar that fell 60 basis points today. Dollar futures, what we pay attention to, but it's still up pretty high. We're seeing either to rally in the dollar or the dollar just went back up to the top of its range, and that we keep on moving sideways and then we head lower. It seems like heading lower is the thing we should expect because the administration wants to pump money within the system. They want to ease rates. And we even have a point where, what was it? New Zealand this week did a 50 basis point cut, like unexpectedly a way bigger cut than we would have thought. And so we have central banks around the world who are either thinking or in the process of cutting way faster than the Fed is. That means that if they do that, the dollar will rally too hard, and you can't have a crazy differential in what's going on, because you can imagine that if the rates are too high in the United States, so you're going to get paid more on lending to the United States, it'll drain money from abroad into the higher performing assets, the higher interest assets. So, but they want to release funds. They want to add liquidity to the markets. And so you can imagine that the Fed will come back and go, hey, yeah, we got to cut 50 basis points. We got to cut 75 basis points. We got to cut 1%. Yeah, that's not going to happen. But you can imagine that the rhetoric will be, let's forward guide the market to much lower, much faster. So we'll see. So the dollar, this dollar pullback, I'm not taking it as a trend yet. I'm still considering this to be a run up in the dollar, and the dollar can get all the way up to, what is this, 101.7, and that would be pretty could be pretty jarring for markets, except that we've seen all-time highs in equities and even a rally in Bitcoin with the dollar going up. So I don't know what's going on. All I know is that something is going on. And of course, if you're trading Forex, that's fun too. I'm sure that's been a fun ride. Next up, we have equities. So we've been
before we go to equities, were you in the market? Were you in the market today when this happened? Did this happen to you during Price Action Live?
No, it happened after that. We had already closed out for the day, and then I was actually heading into another meeting, and then I look at the chart and I hear click, 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 all these, all my bells and whistles that ring when things happen, and I just couldn't believe it. I mean,
did you lose anything
other than my account and my pride? Yes, I lost. I lost my eval account, but that was through my own stupidity. I shouldn't have lost it. I've been doing this, I've been saying this thing for days now. I should just. Oftentimes, what we see is a rally in the overnight. Here, I'll show you. Why don't I just tell you? I might just tell you what I'm seeing here. If we take a look at the NASDAQ, so the blue bars over here, we're seeing these blue bars are the overnight sessions. The black is the U.S. session. So you'll notice this pattern where in the overnight session, equities move up. In the U.S. session, it falls down. In the overnight session, it goes up, down during the U.S. Again. So today I was like, I'll just hold a short from up here and just move on with my life. But we were sort of like middle. We were in the middle of overbought, oversold, and so I sort of like tricked myself into thinking the wrong thing, and I was actually long.
God.
And so this happened, and I was actually long, but I should have just been short.
Why do you do that?
Because I hate myself.
Why ignore the charts? Just look at the chart. Forget about maybe it's a little different. Just follow the chart.
Well, that's what I'm saying. Today, everything was flat. Like this move that we saw today wasn't telegraphed. It was all flat.
Yeah, but you just described this pattern, right? Everything I've learned from the traders that we've interviewed here on this channel
mute his mic.
Is that you look at the pattern, you follow the pattern. What's with this? I'm going to use my gut today. Seems flat. Do better, Tom. Do better.
Okay. Sure. Right. Fair enough. Price Action Live, guys. Tuesdays to Fridays, 9:30 a.m. Come watch to find out what you shouldn't do if you want to succeed.
Option G agrees with you. He says, yeah, it was flat. Yeah, I get it. But did you not just see the chart he just showed? He just showed on his chart. Check it. Up, down, up, down, up, down, up, down. All right. Now, I don't know about I'm not like you people. All right. I'm not like a super genius and trader. You're like, I'm not super genius. You could trade, okay? To me, that all looks like gibberish. But I know that pattern, and I wouldn't go against it. No matter what happened today, I wouldn't go against it. Does that make me better than Tom? Yes.
Why don't you open up a prop firm account and you trade it then? You're so smart.
Okay,
No,
fine, I will. Look, I'm
wanna-
teasing you, of course. You know, I get it. The hindsight's 2020, and you don't always know, and you gotta. So I do get that. You know, I'm just picking on you, right?
All right. So, yeah, equities. So, I just want to check. Did we have the blueprint card up by? Was it a blueprint that was up before in the starting soon?
Oh, did I have blueprint? Oh, shit. I'm sorry. Yeah, I had the wrong thing up there. No problem.
No problem. All right. So equities. Now that Peter's done lambasting me, equities. So we talked about equities, what's going on over there. If we're talking about support levels, I mean, we're not in that conversation. We just blew past all these different levels on all these different charts. So the big question here is what is going to happen as far as the either Trump doubles down on this, more tariffs, more problems, what have you, and we should just expect more selling. I mean, we should just expect more selling until we get 20% down. I don't see any reason why that wouldn't be the case. And trying to go long, I mean, if you're just buying the dip for long-term stuff, I totally understand. But if you're trying to trade intraday, this to me would be very hard. You want to wait to see some sort of resolution on this, or just expect more downside until the news reverses. This is where you're going to want to, I hesitate to even say this, Peter, but you might want to get a Truth Social account just to be able to get the next tweet, or have some Google alert. Just get a Google alert that lets you know when Trump says something about China or when some information comes in, because you can imagine that as soon as it comes in, if it's a reverse of that trade, can you imagine the money you can make $10,000, $15,000, $20,000 to the upside on this thing?
I don't see how, if you're a trader, you don't have Truth Social. I mean, you got
it's just so much. I had it. It was just so much coming at you.
We have in the chat, Adrian. That's funny. I'm up 2% on the day, not buying the dip. Too many negative catalysts. What do you think?
Fair enough. If you're going to be doing long term, I find it to be too hard. This is like, you know, one of those things. Don't fight the trend. Like, let it go down until it's done. It's not following any levels. It's smashing through all the levels. Just let it go. What is interesting to me, though, is Bitcoin. So you guys probably know Bitcoin, it has a bull run. The last two bull runs for Bitcoin lasted each exactly 1,064 days from the bottom of the market to the peak, the candle top. 1,064, not 1,062, not 1,065, 1,064 days. And 1,064 days ends about October 20th. So I was always expecting some sort of potential pullback between now and then, even though we passed OPEX. So if the selling continues, I could totally imagine Bitcoin gets lower still. Does it get down to $75,000? Maybe.
Eesh. What?
And if this trade stuff continues, maybe it just ends the bull market.
Oh my God.
It's done. Because this is my period. This is what I was expecting, that around where this green line is, that this would be the end of it. So maybe we're going to be topping. I don't know. You don't know. What I like about charts and cycles and seeing these setups is that you don't know what can cause it to happen. You just know that something is likely to happen. And if we're not going to go to $50,000 or more, well, then I think we go down. But I think betting on Trump changing his mind and not wanting the markets to go down is a no-brainer. You got midterms coming up. He doesn't want the stock market down. And plus, as we're going to see in a couple of minutes, the administration is all geared to supporting markets. So to that end, before we move on, let's take a quick word from our sponsor.
Looking for a prop firm that actually plays nice with automation? Meet Blue Sky, built for serious traders. And with Traders Post, it just clicks. You connect Blue Sky inside Traders Post, route your TradingView signals to paper or funded accounts, and let it auto-manage entries, stops, and targets. You control risk per trade, filter by session and symbol, and pause or resume with a single switch. Every fill is easy to review in one dashboard. Funded accounts can request payouts daily with launch plans starting at $49. Get funded with Blue Sky. Execute with Traders Post. Apply today at bluesky.pro, BLUSKY.pro, and plug in your edge. Trading involves risk. Use proper risk management.
So before Trump decided to throw a nuke on markets, we had Scott Besant, Bo Besant, Dreamboat, Treasury Secretary Besant,
Scotty B.
going around and jawboning the markets, or rather letting people know that the Trump administration is looking to support markets. This I thought was pretty interesting. That he was on CNBC the other day talking about how the Dodd-Frank bill, which is a set of regulations that are designed to limit banks. So as in response to the 2008 financial crisis, the global financial crisis, there are new rules, Dodd-Frank rules, that were set into place that made it so that there were stricter requirements for banks, that they have stricter requirements for how they handled reserve assets, how they lent out, all these different things. And what Besant is about to explain here is the idea that this needs to be repealed. So let's see what he has to say. One moment. Oh, sorry. Give me 1 second, Peter. I gotta.
Yeah, take a second. Actually, while you do that, I want to just let everybody know real quick that there's a lot of content here on Traders Post. Today, it's after hours. It's a aftermarket commentary show. But you can also see Tom Hartman and Mike Christensen trade 4 days a week, Tuesday, Wednesday, Thursday, Friday at 9:20 a.m. Open up the market, price action live. So that's really fun. And then we also have Blueprint that happens on Thursday, and that's at 3 p.m. And you can learn about coding, PineScript, the last series we did about how to make $10,000 a month. I know it sounds like a scam. It's not. As a Pinecode developer on Fiverr, you can go and check that out. And then we have interviews, trading about sessions with traders, prop firms, traders, quants, et cetera, et cetera. You can see that all on this channel right here. So if you haven't, like and subscribe so you can be notified when that pops up. And go take a look at that great content that we got waiting for you. Now, back to Tom.
Excellent. So this is Scott Besant on CNBC.
Comments from the Treasury Secretary regarding the banking sector. For that, let's get to Steve Leisman, who's been following it. Morning, Steve.
Hey, Sarah. Yeah, this Treasury Secretary doesn't mince words. Scott Besant making some sharply critical remarks about the 2010 Dodd-Frank Banking Reform Act and promising sweeping deregulation to help stem the decline in community banking.
The post-crisis framework has left a trail of destruction in its wake by reinforcing the larger economic dynamics that have hollowed out the American heartland while enriching the money centers in coastal cities. To be clear, the financial crisis underscored the need for new regulations. The purpose of Dodd-Frank was to end too big to fail, but it ended up creating too small to succeed.
So this is in a sense true, right? There's been a, in order to keep up with these regulations, you need the resources and the markets for large banks. The small community banks could not compete, could not spend the money in order to stay up to date, to be able to do these things. So they close down, they get bought out, and you have this aggregation of these banks into larger and larger entities. And so they're saying, well, we need to stop that. We need to go back to deregulating the space and allow community banking, local banking, so that that money can be made available to business owners, to small business owners, and people who want to start small businesses in the heartland. So if you guys are interested, there is an interview of Richard Werner, author of The Princes of the Yen, who was on Tucker Carlson a couple of months ago, talking about this correlation between the number of banks in a given population and the innovation and freedom of that population, the economic freedom of that population, and that you need more and more banks. The more banks you have, the better off you are. He even describes this idea that China was able to go from an agrarian society up to a superpower by doing exactly this, that the head of China at the time, I forget the person's name, went to Japan to learn, hey, how do you get economic prosperity? And they said banks. And he came back and he instituted policies that caused banks to be created everywhere, and it caused China to go from agrarian to first world in 50 years. And so the idea here is that, or what it sounds like, this is what the Trump administration wants to at least attempt to create more local banks. What I hear is deregulation. And deregulation, which means the banks, get the shackles taken off of them, and they could take higher risk. They could do more things, more flexible, more lending, or what have you. It could result in more liquidity being added to markets. Now, whether that liquidity is being added to the economy or to financial markets, we have yet to see. But this is just another example of how the Trump administration is looking to unleash liquidity, unleash money. And that tells me markets up and to the right. Markets up and to the right. Cut rates, deregulate. Let's get the training wheels off these things. Let's get the I'm looking for a term in cars where they limit how fast the car can go. There's a term for it. I don't know.
You can ask me more about Dragon Ball than cars. Okay, you got to ask John Wage about cars. He's the engineer.
So that's pretty interesting. What's gonna be happening there? So as far as policy is concerned, we are seeing policies around the world become less restrictive, making the Fed just naturally, if they do nothing, more restrictive. And we're seeing stuff like this. We didn't touch on. It's not so important for after hours, but Scott Besant was also saying that they want to support Argentina with currency swaps in order to help Malay over there. So, and that's all part of the trade war, or the war with the economic war with China, because China is making inroads into Latin America, and they want to stem that. All very interesting, but you guys go take a look at more of that on your own online. Here, we're just looking for the things that can move markets for you in the short term, and that's what we've touched on. Peter,
has gold done anything?
Gold went up. Gold went up today. So that was sort of interesting. It's hard because the move is not significant enough in order to make a big claim. But when you're seeing here, so gold went up 1.4%, something like that. So nothing crazy. But so the dollar went down, gold went up. So that makes sense. Equities went down. Equities went down, and bond yields also fell. So if we look at the U.S. Treasury yields, they also fell today. So it's sort of like it's sort of like a flight to safety sort of situation, but not exactly. So when bond yields fall, when bond yields go down, it means bond prices are going up because people are buying the bonds, right? If people are buying bonds and there's more demand than what's needed, then the yield goes down because they don't need to offer you as much interest on the bond since there's demand there. Makes sense. So bond yields are going up. Gold went up as the dollar went down. This is sort of normal. It's like it's such an average normal move that it would just counteract. So let's say there's a bunch of selling that's happening in equities. Well, that money needs to go somewhere, right? And oftentimes it'll just go into the bond market because buying bonds are far more liquid, and people don't want to hold cash. So might as well hold bonds that actually earn some interest. So we just had that rotation in there. Nothing big. And gold seems to have been a beneficiary of that, but very minorly. Nothing to write home about.
So what's the trade in all this?
The trade, because we close on the lows, specifically because we close on the lows, I will be looking for Monday a sell-off. After that sell-off, depending on what news is happening, what's being floated around, you got to be ready to go long. I think you got to be ready to go long in this market. Because clearly Trump wasn't trying to make markets go down.
What did you think was going to happen?
I think he was on the can, and he just felt like this is terrible, and he wanted to get back at his girl. So
Okay.
he's been tough to tweet, but he's going to come back with a, "Hey, baby, you know I didn't mean that." I mean, he's done it every single time.
He cares about the market. I think Austin G is right. Trump cares too much about the market. Come on,
Too
man.
much.
I was telling this to Mike today. I was like, isn't it just going to go back up? Now, I guess we'll see. But I agree with option G.
To me, it's Final Destination, and he's driving with his hands at the top of the roof of the car. I control my own life. I control my own destiny.
It's a
But
deep
when it
cut.
comes
I
down
think
to it, and that train is barreling down on him, he wants to be pulled out of the car like anyone else. Am I a little bit too old for that reference? Are people not going to get Final Destination 1?
Yeah, I don't know how many people have seen that.
Great movie.
All right.
All right. Well, that's it for After Hours for today. Join us next Friday at 4 p.m. Eastern Standard Time for more Trump shenanigans. Keep in mind, this is not a left or right show at all. The show is all about how we make money off of what's going on. Because as traders, we don't just watch the news, we trade it. I think you can't fix stupid or Trump, says P. Morton. Hey, hey, I'm not going to argue with that. I'm not going to argue with that.
I don't know who's stupid or who's not. I'm just looking at the market and seeing what's going on. Like Tom was saying, this is not a left or right or anything like that. You got to look at the numbers. You got to look at the market. But you can't say we don't live in exciting times, can you? Can you?
Yeah, I just wish those exciting times ended up with me and be on the right side of the trade. But let me go drown my sorrows in a can of chocolate milk over the weekend. For now, I'll wish you guys, as always,